All right, guys, welcome to today's video. We're going to analyze the new contract rollover for this month. So in the live trade room, uh, we get together every morning. We analyze this particular market. We go through it. We find opportunities. We look to potentially capitalize on those opportunities. The purpose of the trade room is to refine the skill set. Listen, trading is a skill. It's a set of skills. It's a skill set. If you can execute on those skills, you can be wildly successful. It doesn't matter if it's crude oil or if it's Apple or if it's some no-name company out of somebody's garage in Minnesota. Like, it makes zero difference. If there's a chart, there is a confluence of skills that can be applied to that chart. So what we're going to do today is we're going to analyze the new contract. So we were trading the CLH2023. Today we rolled over to the CLJ2023. In fact, I was going to do it on Monday because the contract really doesn't technically expire until next Wednesday, but one of my students in the class said that NinjaTrader wouldn't allow them to trade, so it prompted me to do this a little sooner than I had anticipated. One of my other students, Jay, super great guy, had also said, "Hey, listen, would you make a video about it so we can kind of get a feel for it?" I said, "Yeah, of course I'll make a video about it." So that's what we're going to do. We're going to make a video about it. And I'm going to kind of walk you through how I view the market. We're going to start very big picture. We're going to look at a weekly chart. And then we're going to dial that down into a daily chart. And then we're going to dial that down to probably about a 4-hour chart. And then down to about a 1-hour chart. And then we'll see how that looks. We may go down to a 15-minute chart. But ultimately what we're looking to do is identify big picture areas of support and resistance by creating channel structures. And in doing that, when we get to each session during the day, we can sit there and kind of anticipate what we're going to find. So let's start big picture. And there's no perfect way to do this. So I don't want somebody to think that there's one way to do this or not. This is your interpretation of how to identify support and resistance. I'm going to likely draw some lines and end up deleting them and changing them and making them look different. But ultimately, what we're going to end up with is a handful of structures. And those structures are going to represent support and resistance. So I'm going to start by looking for some pivot highs, looking for some pivot lows, drawing some lines. So you guys can watch along as I do this. This little pivot low here kind of jumps out at me. And it nicely kind of walks along these lows here. So what I'm going to do here is I'm going to make these pretty thick. And as we dial into a shorter time frame, I will thin them out slightly. So we're working with a weekly chart, so I'm going to make these pretty thick for now. And then when we go to the daily, we'll thin them, make them a little thinner, and then the 4-hour and so on and so forth. So on a very simplistic basis, we can say that when price has historically touched this area, that the buyers have stepped in. When price has touched this area, historically speaking, the sellers have stepped in. Okay. So point number 1, point number 2, point number 3. Okay. It requires a minimum of 3 points to create a channel structure. So buyers stepped in back here. Oh, look what happened here. Oh, buyers stepped back in again. So it's a way for us, by using past price action, to potentially identify what's going to happen in the future. Now, is there anything etched in stone in the stock market? No. And if somebody is telling you that there is, they are lying to you. I know you probably don't want to hear that because nobody likes to hear that they're being lied to, but I'll be the first to tell you when somebody's lying to you. So I am looking to identify we could agree when price touches here and here, pretty close here, maybe not so much here, that, sellers start to step in and say, hey, I think we're going to push the market a little lower here. And in order for me to create a channel out of that, I simply clone it, and then I will bring that to point number 3. So, point number 1, point number 2, point number 3. Okay. You can see price consolidated, and when it fell, it came pretty close here. So these couple of lines that I've just drawn offer something meaningful. Okay? Price reacts to these lines on a fairly consistent basis. Now, I know we're looking very big term here. This is a weekly chart. We're going to dial it in. Don't worry. But we're just trying to capture kind of some major moves here so that we know if price comes near these major moves that it may react again in the future to them. So, next step. We look to see, is there anything else here that really kind of stands out to us? Now, don't get too caught up in the moving averages, and the reason I say that is they're set for a day trading time frame, not really set for the time frame that we are currently looking at. Because we're ultimately going to dial this chart down to a time frame that we would day trade on. So let's see. Okay. So point number 1, point number 2, point number 3, and look at how price reacted to it in the future. So I think I've drawn enough structures per se on the big picture in order to say, we've kind of circled the wagon here. So what I'm going to do is I'm going to just change the colors on these ever so slightly. And the reason I'm going to do that is so, when we are day trading, we kind of just can reference back to, hey, this is black is the oldest channel, and then blue was, number 2, and teal is going to be number 3. So we're going to use the thickness of the line to identify that we used a higher time frame, and then we're going to use the color to see, what's newer and what's older. And this kind of gives us an easy way that when we are day trading, we can go, okay, we know we're approaching something meaningful. So this is a weekly chart. Now we're going to dial it into a daily chart. So same amount of data, just adjusted accordingly for a daily time frame. So we can say that, we captured this big price window pretty accurately, and we captured this blue channel structure pretty accurately, and I think we captured the teal structure pretty accurately. We don't need to get super carried away. We don't want to clutter the chart, but we just want to notably identify some of the bigger areas that price is going to likely react to. Now I'm going to tighten this just slightly because when we move from time frame to time frame, there's a little difference there. So you see how I'm just going to kind of pull that in so it sits nicely. Pull this in a little bit so it sits nicely. And then we're kind of in pretty good shape. I like the teal touching nicely. Black channels touching nicely. I'm content so far. And we've accomplished something. We've accomplished a pretty reliable, set of patterns here. Now, what is price doing? Price is, I call it coiling. But ultimately what's happening here is it is tightening. You can see this compression pattern. We've gone up and down, up and down, up and down. But what are we approaching? We're approaching descending resistance. We are approaching slightly ascending support. And as price continues to move within this blue and this black line, it's ultimately going to tighten into this area. Now, I personally like when price tightens because it builds energy. And that energy typically results in a price push in one direction or another. Now, it may coil up in here and pop up, it may coil up in here and break down. I typically don't care which direction it goes in. I just like it to go in a direction. Okay. My job as an analyst, as a market technician, is to be able to identify when the price offers that direction, which direction it's going in, so that I can put together a plan of action of how I'm going to take advantage of that move. So let's dial this down on a little bit of a tighter time frame here. We're going to go right down to the 240, which is a 4 hour, and we'll take a quick look here and we'll see if price seems to be reactive to our channel line. So we got resistance up here, support down here, resistance up here, support down here. So I don't want to get too crazy drawing too much here on the 4 hour because our daily and weekly charts are doing actually a pretty good job. So I'm going to roll it down now to 1 hour. And in this hour, I'm going to now start to kind of take a look and see, can I identify some smaller time frame moves that might be meaningful to me. So I'm going to just again start the process of drawing a little bit. You can see that my highs and my lows are marked by H's and L's, and I have that set up so that I can quickly and efficiently say, okay, here's a high, here's a high. Do those two highs represent resistance? Now, I'm also going to take these and I'm going to knock them down in size a little bit. I'm going to probably go back to, I'm going to go back to 2. And we'll go back to black here. And ultimately, we do the same thing that we did with the big time frames. Okay, we got to identify our 3 points of control. So 1, 2, and this is 3. So that does kind of give us some insight to where we're headed, and we need to do the same thing here. We need to see, are we identifying some lows along the way here? So we have a low here, and a low there. So we can expect that in the future, when price touches this area, that it's likely going to react to it. Okay, doesn't mean that it's going to hold there. Doesn't mean that it's going to necessarily not go through it. What it means is that we could expect price to do something at that area. And when price does something at that area, whether it's a reverses or it goes through that area, that we should be able to put together an actionable plan to perhaps be able to decide if we can capture an opportunity, whether that's to buy long or sell short. We really don't care. As traders, we are looking for price action. Price action helps us identify opportunities. We don't really care if it's long. We don't really care if it's short. What we care about is, can we make money? So I just placed off of this high here, and I just placed off of this high here. I mean, we could all agree that price popped up here, ultimately failed, basically retested this, and is still failing. Why is this significant? Because if price does continue to fail here and does break below this support line, more importantly than break below it, settle below it, meaning close below it on an hourly basis, there's a pretty good chance that we will likely head towards our next level of support. Now, our next level of support, just dialing in on this short period of time frame, this is just over the past couple days, is going to take us down into we'll call it the 76.80 handle, somewhere in that area. Now, this is going to evolve. Okay, this price could go this way and then go up and then flutter around and then come down and fall all the way over here. And if that becomes the case, that it settles here, we could then potentially be looking at a target down in the 76.40 handle. It all becomes contingent on what price offers. Until price confirms something, to me as a trader, I just stay hands off. Because all I'm going to do if I try to micromanage price movements is I'm going to lose money. Now, I don't know about you guys, but I absolutely, positively hate losing money. So not only is there a way to look at this from a channel structure, we also look at this from price support or resistance area. So let me show you what that kind of looks like. Let's look at the high here is at 39. So where there are areas of indecision in the market, we're going to find price pockets, if you would. And those price pockets are going to create what I call a base. And bases are typically required to see price extend or reverse. So what I identified here is price had a bottom. We had a big impulse up. We had a little consolidation. We had an impulse, another little bit of consolidation. Impulse, we had a correction. Big impulse, some consolidation. And I identified this area of consolidation as a meaningful place where support is likely to be found in the future. Now, how did I know that? Price came back here and tested it. It went higher. Tested it here. It went higher. Tested it here. It went higher. Tested it here. Had nearly a picture perfect reversal. Price went higher. Came just a little short of touching it here. I think all of you would agree that this highlighted green area serves a meaningful purpose. Okay? And there's going to be more of them along the way. I could work off of this low here at 09 to the close of this candle at 70. So go to the high of this candle here, 88. Okay. Price had a bit of indecision here. In fact, I could even move it back here if I wanted to this price action. And I could say price was indecisive, rallied, came back, found support, and rallied again. If price were to break down through here, we could expect that in this area, we would then see price find some type of support. Now, is that support permanent? Not necessarily. But could that support provide a reversal? Sure. Why not? And we can look back in time and find these areas that we believe price will react to. We can go off of this low here, 64. I don't want to use, you could use this whole candle. It's a very, very wide area, but the high there would be 89. So when the market is going up, what are we going to build? We're going to build these areas of consolidation, which are going to be support. When the market is going down, we're going to build areas of resistance. Resistance here, new resistance here, new resistance here, new resistance here. So I'm going to show you what that looks like as well. So I have a high up here of 69 and a low here of 74. Now we haven't tested this area just quite yet, but we can anticipate that if price were to get up to that area, we may experience some form of pushback. But we have tested this area. So I have a candle high of 85. And a close here of 37. So price fell, price came back up, price fell. Way in the future, price came back up, price fell, price came back up, price fell. So in addition to these channel structures, you're going to find that you're going to have to be proficient at identifying areas where price also stalls and reverses. High here is 84, and the low here is 53. So this area right here, price fell, price retraced, price fell, price retraced, price fell, price retraced and stalled, price retraced and fell. So wouldn't you all agree that this area likely houses supply or resistance? Or it does. Where do we find the greatest support or demand or supply and resistance? I will tell you that, and that comes in place when you have an alignment of a price zone with a channel structure. When you get a price zone here with a channel structure that accommodates it, that's where you're going to find your greatest strength. Does it mean that price can't go through it? No. But it means that price is likely to hesitate in that area. Okay? So now we're going to zoom in even a little bit closer here. What else do we have here to work with? I would say, we know we have good resistance up here. We probably have some resistance that is starting to descend a little bit here, based off of this high. So this high would be 41. And the close here would be 95. Okay. This area is pushing price down. Now, I traded today with my clients, with my students in the live trade room, and it was just an awful, awful, awful choppy session. We found two little areas that were ideal to trade. One of them, I placed a limit order. It never got filled. By the time I would have been starting to take some profit and moving my stop, I just closed my order, and that was the end of it. The second one was a little bit of a breakdown. It was sluggish, but it did follow through nicely. But outside of that, price, and you can see it here on the hourly chart, has just sucked back into the moving averages and VWAP over and over and over and over again. So when price gets tight like this, it's very hard to trade. When price trends like this, when price is below the moving averages, below the VWAP, they're spread apart, and price is traveling in a direction, it becomes very pleasurable to trade because the statistics are on your side that you're going to find success. When you try to trade inside of this, you might as well just hand over your money because the market is literally going to take it from you. I would say it's probably safe to say that we have what we call a level on a level, meaning that from this point here at the low is 47 to the high is 09, that we're probably working off of this level, just finding some support just a hair shallow of it. But you could see there's a level here and then a level below that. Typically, the deeper levels, when they're close together, the deeper level is the level that has more strength to it. So this is pretty much containing price action. I'm going to dial it down one more time to a 15-minute chart. So we could probably draw just a few final channel structures based off of what we have here to work with. I think we could work with this high and see how that descends very nicely. What does that mean? Here's a high. We tested this lower high, followed by this lower high, followed by that lower high, followed by just a little short of that one. So we could say with pretty good certainty that as we trade, as price approaches this, there's a pretty good chance that price is going to continue to fall. So you can see I really kind of shallowed out the channel lines because now we're kind of really getting down to very, very short term. These are going to evolve and they're also going to need to be changed basically day to day. These are the ones that you're going to have to kind of, readjust accordingly. How else can I view this? I can see from this low here to this low here. And why would I be looking at this? I'd be looking at this in the sense that if price broke this area, that we would then look towards support down in this area. Okay, so this would be a line in the sand. My primary channel is this channel right here. This would be my secondary channel, or what we would call an internal channel, a channel within a channel. That if price were to break below here, there would be a pretty good chance that we would test somewhere down in this area. Now, if price were to get some gusto here and break above this area, pretty good chance we would then test this area of resistance. So while these smaller channel structures built on smaller periods of time may seem insignificant, they do have great meaning. Okay? They would, in fact, offer. Let me just open this back up. My wife decided to call. They would, in fact, open up the opportunity to either short and find support down here, or potentially buy long and find resistance up here. So that's the reason that we use very short-term analysis, because when we're day trading, we're not looking to buy it today and sell it next Thursday. We're looking to buy it now or sell it now and be in and out of it in the next 20, 30, 60 minutes. Okay? We're looking to make our days pay in a short, reasonable period of time. We're looking to take and place a calculated trade based on a calculated analysis and approach that has minimal risk and optimal advantages to it. We want to get in. We want to place a very conservative stop. We want to manage our stop appropriately. And we want to take and book our profit as well. So this is how we ultimately dial down our price action into our 3-minute chart. I'll zoom out so you can just kind of get a glimpse of what it all looks like. But we have worked our way from a weekly chart to a daily chart to a 4-hour chart to a 1-hour chart to a 15-minute chart all the way down to a 3-minute chart. And this is the chart that we will place and manage our trades on after or including using all the data that we compiled throughout this entire video, using all those time frames that I just mentioned. So I hope you found this information educational, because that's what it's designed to be in nature. If you'd like the opportunity to work with myself, join my live trading room and work with a group of like-minded traders. We get together every single day from 8 o'clock in the morning till 11 o'clock in the morning. It's 3 straight hours, and we analyze the market. We look for opportunities, and we go through the process of eliminating high-risk situations, and we just look for those low-risk, high-probability trades. Now, it requires a level of patience. So if you're new to trading and you're just excited to hit the buy and sell button, coming to work with me is probably not for you. If you've been trading for a little while and the market's kicked your ass a few times and you're ready to stop gambling, stop playing, and really start learning how to take everything I just shared with you and implement it into a low risk, high probable trade plan, well, then those are the traders that are working with me. The ones who have gotten over the excitement of just wanting to buy or wanting to sell because they think they have to trade in order to be a day trader. Listen, this entire week has gone by. It's Thursday. I'm shooting this video. I took one trade on Monday and one trade on Tuesday morning early, and that's it. I haven't touched a trade since then because the market hasn't offered something worth taking a risk for. But when the opportunity is worthwhile, our job is to identify it and then be able to put that into action so that we can find opportunities. So if you're ready to get to that level of trading, when you're ready to say, listen, I'm going to do this, this is a skill set that I can learn and keep and refine for the balance of my life, I can share it with my children and grandchildren and nieces and nephews and friends and family and whomever wants to learn it. When you're at that point, that's the point that you want to come and work with me, because that's the point that my students are at, and that's what allows us to do the next level stuff beyond the pitchy sales like programs that are out there. There are a dime a dozen. There's hundreds of competitors out there that are trying to sell you their magic bullshit. Okay? This is hard work. As soon as you recognize it, realize it, and are willing to accept it and embrace it, that's when we can get down to business, and that's when we can refine the ability to identify when and where there's opportunity and when and where there's not opportunity. And it's just important to be able to identify both. So I appreciate your time today. There's a bunch of links below this video on the YouTube channel. Check them out. You can see some of the tools that I use. You can visit my website. You can get started. My personal email is there. If you want to have a conversation, send me an email. We'll talk. I'll send you a Zoom link. We can have a chat. We can talk back and forth via email. If you have questions, let me answer them for you. I mean, that doesn't cost you anything. And if you want to get involved, I've made it very, very affordable for you to get involved. And you will work with me one-on-one. All right? I have no sales team, no retention team, no client support team, No upsells, no, none of that. That doesn't exist. You want to work with me, that's what you'll get. Period. There's no middleman, there's no excess, there's nothing. It's just straight up. This is the deal. This is what I have to offer. If you're serious about it, let's get to it. If you're not serious about it, there's other people that are. So I prefer not to take my time away from them. So I'll catch you on the next video. I appreciate your time today. I hope you learned something. Hope you got the opportunity to see how we dial out from the big picture down to the little picture so that we can identify these opportunities on a somewhat daily basis. So I'll talk to you guys soon. Take care.